All right, welcome back, traders. John Caruso here for the morning of October 24th. RJO Futures, quick look in on the market. We actually just opened up here. We are starting to see stock prices come off once again from those overnight highs. It was a roller coaster recession. Obviously, we did hear the news in the overnight. The G was confirmed to an unprecedented third term over there. Markets aren't taking too kindly to that news, so we're starting to see price action come in. Obviously, the move on Friday was all about the leak by the Federal Reserve to the Wall Street Journal about them potentially slowing their pace of interest rate increases over the next couple of meetings, which, to be honest with you, we don't necessarily think is new news, but the market took that information and ran with it. We saw some key reversals on the charts in stocks. We saw a key reversal in gold. We saw a key reversal on the downside in the U.S. dollar. However, this morning we do have gold prices coming in a little bit. U.S. dollar is reflating a little bit, as well as the market is still digesting the news from the overnight. So this is the way that I see the market at the moment. Obviously, the Fed is trying to convey a different message to the market, at least over the near term. I have heard some rumors that there could be some back channel QE programs that actually run through November. We're going to be keeping our ear to the ground and listening to hear if we hear any more on that topic. But I am open to the idea that we can see a near-term rally, a bear market rally, if you will, something similar to what we saw in maybe June and July, maybe a little more shallow than what we saw in June and July, but I'm open to the idea that we can rally from here. I remain bearish on this market and will continue to position incrementally on the bear side as the market moves higher, if the market moves higher. So I'm going to give you some key levels in the S&P and the NASDAQ right now. So if we are going to see a near-term rally in the market, the NASDAQ has to hold 10,937 on the downside. The S&P has to hold 3640 on the downside if we're going to see a near-term rally. So those are some risk parameters that you can outline for yourself if you are trading this market in that fashion. So basically those two levels were Friday's lows. Those key reversals, we got to hold those key reversals. Same thing with gold. Gold has to hold that key reversal that it made down there at 1621. It did break the previous key reversal at 1622, which is very interesting, and I do think that that is still a very important level to keep an eye on. So if you want to take near-term trades, bullishly position on the gold market, but you have to use that 1621 area as your risk parameter from that regards. Taking a look elsewhere, the U.S. dollar. U.S. dollar had that second key reversal that we've seen in the last 2 weeks. The first one, that key reversal on the downside, came out of the news of the BOE. This next key reversal on the downside happens on the back of the Federal Reserve. So this is why I think that maybe we could see a little bit different picture in the market over the next couple of weeks, at least through November. Seasonality suggests that we could see a strong market into November. And of course, this week, we've got mega cap tech earnings that are coming out as well. Now, I don't have any grand projections about mega cap earnings. I actually think you're probably going to see a mixed bag. You're going to see some come in weak, some poor guidance. You're going to see others maybe beat expectations with a little bit better guidance. But ultimately, we do think that the path of least resistance for corporate earnings and profits from here is back to the downside. However, we're gonna be watching for those mega cap tech earnings and listening into some of those calls this week. So that's all I have for you here today. So the main takeaway here, I'm open to the idea that we can trade higher into November, perhaps through the end of November in markets from here. But obviously, we've outlined those very important risk parameters. Sit 3640 in the S&P and 10,937 on the downside in the NASDAQ. So best of luck to you out there. We'll catch you back here tomorrow.